looks like we've reached critical mass, so we are going to go ahead and kick things off. First, I wanted to thank everyone for joining us today. My name is Kristie Harkins. I'm the Chief Marketing Officer here at OTC Markets Group, and I'm thrilled to be joined by Dan Zinn, our General Counsel, and Jason Paltrowitz, our EVP of Corporate Services. So today's focus is going to be talking about OTCID, which we will jump into straight in a minute here. Just as some quick housekeeping items, I did just want to let everyone know this webinar is being recorded. We will make the webinar available on all of our various social channels and via email to everyone that's registered here today with us, but also to anyone that was unable to attend. There is a Q&A box that is found at the bottom of your Zoom console. So to the extent that you would like to ask a question, you can log it there. We do have some pre-prepared questions just to kind of go through the overall flow of the day, but I will be keeping track and we'll hopefully have a few minutes at the end to address some of those questions, and if not, be able to follow up with anyone that asked a question that we didn't get to in the course of the webinar. So with that, I would love to kick things off. We're here today to talk about OTCID and some of the market structure changes that we have recently announced. So Jason, I'm going to start with you. If you could just kind of at a very high level, give everyone an overview of what the OTCID market is, just to set the stage for today.
Sure, and thanks everyone for joining. I always enjoy having the opportunity to talk through these things directly with our clients, partners, friends, and prospects. So OTCID, if you really want to think about it, is kind of the next iteration of what the rule change to 211 was that we rolled out 3 years ago now, I think it is, Dan. And it's a market so that companies can, at a very bare minimum, have the ability to own their trading on our markets and be able to publish, again, at a minimum, a base level of disclosure and update their profiles for investors. And why is that important? Well, again, as I say, it's the next iteration from 211, is there was a lot of confusion in the marketplace around what pink current was and what current meant. And quite honestly, current didn't mean much given that there was no company involvement and we weren't performing any role as required under 211. And so ID gives companies the ability that don't meet the requirements of our OTCQX and OTCQB premium markets, the ability to still demonstrate the ownership that they're taking of their security and make their disclosure available so that investors, whether it's retail or institutions or family office, understand that there's something behind the ticker symbol, if you will, that that information is real and accurate and updated.
So Dan, you've obviously been on this 211 journey that we talk about with us for quite some time. So why don't we kind of take a step back and let's just talk about some of the market structure changes and regulatory changes that sort of led us to this inflection point that Jason's talking about within the market.
Yeah, I mean, I can cover this timeline in about 45 minutes. That's good, right? That'll work. No, let me just echo Kristie and Jason quickly and thanking everybody for joining. But I think it's a good point. This, and Jason hit on this, it does reflect an evolution of sorts. So without really hitting all of the points on the slide, we have over time changed our market structure in reaction to what we hear from companies and even more so from investors and from brokers. And this is no different. OTCID is no different. With OTCQX and OTCQB, that was a reaction to companies that were engaged in the market, that wanted to access U.S. investors, that wanted to develop this relationship with their investors and brokers in the U.S. And we gave them the ability to kind of separate from other companies that weren't taking those steps. That's established, right? QX and QB have this established value. Jason raised the point about pink current. And even within pink current, right now, we have companies that are connected, that are providing this baseline of disclosure through us with an understanding of what that means, and they are making certain representations and certifications. participating in things like our transfer agent verified program. It is valuable. We have seen the value to investors, to brokers, to compliance officers of companies that take those steps. And so OTCID is a way, again, to recognize that so that we are fulfilling our compliance obligations in making sure that when we put out into the world that a company is meeting certain criteria, that those criteria are defined and well understood. But more importantly than that, we are really evolving to suit the needs of those companies and those investors who want to understand who's connected, who's taking these steps to provide this baseline of disclosure, right? It's not QX and QB, and it's not going to be QX and QB. That's not the point. It is just this baseline market for investors to understand what's out there. And then, obviously the remaining part of the evolution, which I know we'll cover, is what happens to everybody else.
So Jason, maybe as we kind of build off what Dan was talking about, we kind of look at what the options or what the universe now looks like for companies in terms of the choices they can make relative to, our different market structure. Maybe we can just talk a little about what's important for companies to think about as they kind of say, okay, what market is the right fit for me?
Right. Well, as Dan kind of pointed out, our OTCQX and QB markets remain our premium markets. The QX we call our best market, right, where the likes of some of the largest global brands like Roche, Adidas, Heineken, down to SMEs from around the world that still are engaged, but are very proactive in their investor relations strategy and outreach to the U.S. market, whether that be large institutions, family office, third and fourth tier institutions, right down to retail. They're really concerned about things like blue sky laws and opening up their security to that retail investor that otherwise wouldn't be able to buy their stock, all the way up to the IR services that we provide to enhance their visibility. Obviously, QX is a market for stocks that meet the penny stock exemption criteria, right? So no penny stocks on QX. And QB is a market for the same types of companies, but that are maybe pre-revenue. It's our venture market for early stage growth companies that are still trying to do the same thing, but don't yet meet the higher financial standards of OTCQX. ID is not built around that, right? That proactive desire to engage in a much more sophisticated investor relations outlook, or to make the shares available to perhaps the broadest and most diverse U.S. shareholder base. But it is designed for companies that want to separate themselves from, if you're looking at this slide, everything on the right, what I would call just disengaged companies. And more importantly, it gives investors, and this is the feedback we're giving, it gives investors and traders and broker dealers and compliance officers the ability to at least make sure and recognize that the information that is out there is owned, that a company has owned it. It's not late, it's not false, that a company is in the business that they say they're in, that the CEO is who they say it is, that the financials are up to date and accurate. And so you just have that base level, whereas now, quite honestly, in a lot of that pink market that we have now, you don't know if a company is meeting its 12G3-2B exemption as a foreign private issuer. You don't know if the CEO is still the CEO. You don't know if they've changed their business model and that's accurately reflected in their company profile and updates. So it gives the trader and the investor the ability to at least be comforted in that basic level of information is there, and they can make their investment decision. When you get to the right of the screen, the pink, yield, and the expert markets, these are companies where you cannot rely on the information, but the separation between pink and expert, and I'm going to let Dan talk about that more, is more around meeting those 15C211 quote eligibility requirements. Dan, I'll turn it to you there to get more in depth on that.
Leave it to the lawyer to talk about the lower end. I appreciate that. No, but it is important in all the ways that you described, Jason. So again, referencing the slide, right? So to look at the right, Pink Limited now becomes a much more distinct tier than it was before, because it will indicate a lack of that connection and a lack of that ability to discern all the points that you raised, Jason, that an OTCID company is going to have a certification about. And so I'll look at it or maybe describe it more from a compliance or compliance officer perspective as people at brokerage firms or clearing firms are thinking about how to interact with these markets. So from Kristie referenced earlier our 211 journey, which I think will be on forever. But from a 15C211 perspective, a Pink Limited company will still be able to be traded under 211 in much the same way that a Pink no information company, the stop sign that we used to use before the changes to 211, was still compliant in some way. But from a broker perspective, from an investor perspective, right, a lot of those compliance folks that look at the information that we put out, it sends a certain signal, right? And I think Pink Limited, the yield sign, is now going to have the same connotation or similar connotation, that these are companies that, while technically compliant with the rule, are not connected. And so you won't have the ability to see a management certification, to understand a 12G32B certification for a non-US company. And so how that plays for investors that are looking to deposit shares, for investors that are working with brokers, really in any capacity, that's going to be the compliance impact of Pink Limited that I think differentiates not only that market from what OTCID is, but also really changes what that looks like from how people perceive it now. So while we're extending, while you were talking about the left side of the slide prior, and kind of the positives, we're also really, I think, defining the Pink Limited market, the expert market, right? Companies that aren't meeting an OTCID standard are now clearly going to be either limited or in some cases fall directly to the expert market and not be the subject of broker-dealer quotes.
And really, I think clarifying that paradigm as to whether an issuer has sort of taken responsibility for how their information is displayed here in the US. And I think importantly, Dan, how that information also then flows through to all the compliance products we put out and all the things that our broker-dealer community and their compliance teams are really utilizing to kind of make some of those key decisions.
Right. And nothing changes the compliance data file that we put out and the risk flags that we put out, right? Those things will still exist, but the high level that people look at, OTCQX, there's a quality associated with OTCQX. Jason talked about OTCQB, very similarly situated for companies that might not meet a higher financial standard. ID, okay, this is going to be for companies that meet this baseline disclosure requirement and are connected in some way. And then Pink Limited and Expert are also going to have that, that immediate recognition and distinction just based on how people look at the compliance and info that we put out.
So I think one of the things that we should kind of transition to in the next slide is just how we think about the ways in which companies will kind of fall within kind of the framework of the overall market structure. So there is a number of companies and groups that will be directly impacted by the changes we're making. So Jason, maybe you could just highlight a bit of how the kind of world gets, as we approach this July 1 deadline, the world kind of gets reclassified, if you will, into these different buckets.
Sure. And if you look at this list, right, we talk about countries impacted in the three regions. I think it's important to think about it firstly, as I mentioned at the beginning, right, this pink current market. The feedback on that is, the decision was made early on in 211 that if you were, or the assumption was that if you were trading in a non-US market that required English language disclosure, that somehow that was current. But through this process and feedback and discussions with broker-dealers and compliance officers and issuers, there was really no mechanism to actually know or to be on top of, was that company actually current? And to Dan's point, did it meet its 12G32B requirement? Or was the CEO even still the CEO? Or was the business still the business? And so the countries that are impacted initially are these countries, countries as you see here, that are exchanges that have requirements for English language disclosure. So those would have been the countries that under the 211 process were deemed current. And so out of EMEA, you'll see Austria, Ireland, Germany, UK, South Africa, in APAC, Australia, Hong Kong, New Zealand, and Singapore, Canada in the Americas, as well as an entire cohort of US SEC reporting companies. And so we're current in that they were SEC reporting, but we're not doing some of those things around the management certification or the transfer agent verified share program that we initiated a couple years ago. So it's all designed so that when investors are doing their investment research, there is a base blanket of comfort that the information that they're seeing is actually accurate, up to date, and owned, if you will, by the issuer.
I think that's helpful. I think let's transition a little bit just to kind of some of the practicalities. We've talked about, as you guys have been talking and sharing, we've been talking about some of those requirements, but I think sometimes it makes it a little easier to sort of see it on a slide. And we can kind of talk a little bit about how those requirements differ a little bit, whether you're, an SEC reporting company or whether you're, a foreign issuer, et cetera. We can just kind of talk through a little bit about what's required and what we're going to be asking companies to do.
Yeah, I can jump in here a little bit as well. So, the slide gives a very baseline of what the requirements will be. I would recommend anybody listening in to go to our website where this slide comes from to hit those links and really dive into what the requirements look like. But it's not a highly complicated process. Disclosure News Service is what we have always used as a disclosure mechanism for companies that use, for example, our alternative reporting standard. That's also how companies can update their profile. That's how they will sort of gain access to that connection that we're talking about. Where I think you were headed, Kristie, is talking about maybe some of the differences between a US-based company, an SEC registrant, and somebody who's trading outside of the US on an English language disclosure market, let's say. So for an SEC registrant, the requirement is going to be a management certification, which is really a management sort of understanding of what's being disclosed. And Jason kept using the term, comfort and kind of that baseline of information that management understands and is willing to put themselves out there for. That's what a management certification is going to entail. They're also, I think somebody mentioned this as well, going to be required to participate in our transfer agent verified shares program, which is a very big deal and really differentiates what an OTCID company will be doing from what, let's say, a typical SEC reporting company might be doing, right? One of the things that we have noticed with respect to transfer agents and just the ability to access information on shares outstanding or shares authorized is the infrequent nature of SEC reporting, and those cycles means issuers can have a vastly different cap table, really, than what is disclosed in their most recent filing. Our transfer agent verified shares program requires that the company authorize its transfer agent to provide information to us on a much more updated basis, and we make that public so that investors have access to what is not necessarily real time, but much more timely data on how many shares are outstanding, whether the company is doing an offering, whether they're preparing to do an offering, etc. So that's a big deal. Transfer agent verified shares program also applies to a non-US company, but one of the big differences is instead of that management certification, it's a 12G32B certification. I love that they write rules with that many numbers and letters, so that's why lawyers like me have a job. But really 12G32B, for anybody who's not familiar, is the exemption that a non-US company can use to take its home country disclosure, make that available in English in the US, and therefore trade on a market like ours. What we have done, what Pink Current does now, and Jason referenced, is sort of look and see, is a company, on an English language exchange, and have they made their disclosure? That's fine and good, and sort of meets, a 211 standard to some degree. What a 12G32B certification does is connect that company's management to the fact that they are really meeting this standard. It means that they understand what the obligation is to make this information available in the US, and they are certifying that obligation has been met. It gives, obviously, us, from a compliance perspective, what we need to feel comfortable putting this information out. But more importantly, that's what drives investor reactions. That's what can drive volume. That's what can drive recognition in the market, is people understanding that management is engaged with this process. Again, those are going to be two key differences between a US company, an SEC reporting company, and a non-US, somebody who's traded on an English language exchange in a foreign jurisdiction.
Yeah, I would just add on 12G32B, it's not just that you're disclosing in English and certifying it, but there's a number of other things that go into that foreign private issuer exemption. And so again, we were using, are you current in your disclosure in your English language exchange as kind of a de facto checkbox in the old Pink Current system, but understanding and recognizing that there's more to that exemption than just simply publicly disclosing in English. You have to be meeting some other things, and that management is certifying that they're meeting those other requirements for the exemption is important. And it might not seem important, but certainly there have been instances where companies weren't meeting kind of, B, C, and D. And our obligation in putting that information out there, we just need to be a little more on top of that stuff.
Yeah, it's something that we pay a lot of attention to. And sorry, Jason, when we're doing our 15C211, reviews and monitoring our own compliance, this is an important step to make that information available to everybody, so that it's well understood that an OTCID company has a 12G32B certification out there for all the reasons that you mentioned.
And then, of course, the other things that are the same for both, whether you're a US or a non-US company, would be that company verified profile, and making sure that that type of information is up to date. And I joked about it, right? That you're still in the same business that you're in. You'd be surprised how many times, a Bitcoin company becomes an AI company. And so making sure that the company is disclosing what the company does. Or you'd be surprised how many actually very large non-US companies where you go to the information we have, and the head of IR will say, wait a minute, that guy hasn't been our CFO in 27 years. So even things like that, so that investors kind of, again, baseline information, but when they're doing their research, they know it's as up to date and accurate as it can be. And so that company verified profile requirement once a year to just go through that basic information and make sure it's up to date and accurate.
And I think that touches on a lot of the important points as to why this is another level of disclosure, right? That we're asking these companies to be actively engaged in and take part in. I guess, guys, just before we kind of turn it over to some of the audience questions, maybe we can just flip. And Jason, maybe you can just talk a little bit about kind of the process and the deadlines and kind of how that's going to work and roll out, and then we'll flip to some questions.
Sure. So OTCID will launch on July 1st, the last bullet there in the slide. And understanding that, our team and our compliance team in DC and the broader OTC Markets team on the data side as well are going to need time to ingest all of this information and verify it and go through it and do all the work that is required. We are asking companies to make a decision as to what they're going to do on or before May 1st. So for companies that want to use this as an opportunity to say, you know what, the markets are changing. I have a very dedicated U.S. investor relations strategy. I'm looking to really grow my shareholder base. I'm looking to grow liquidity in my home market. I'm doing all these things. maybe now's the time I join QX if I qualify, or QB if I still want to do that but don't qualify. We would need to kind of have that application by May 1st in order to make sure that we can get through all the things that we need to do, so that on July 1st, when the switch
flips.
Oops, yes, sorry. Those companies are in the market they want to be. I will say that this is a very systemic rollout, so there's like no ability to call on July 2nd and say, oh, sorry, I meant to do this. This is all going to be systemic based on the information we have that's been updated. Again, that's why we need that kind of runway to be able to process it. For companies that just want to not be pink limited or expert, same thing applies. May 1st, they would have to have that application done and uploading those financials and doing those certifications, the application in by May 1st, and then within that time frame before July 1st would have to have done all of the work that goes into, again, uploading the financials and doing the verification. So that's that middle bullet there. Between May and June 30th is when a lot of that uploading and document processing will be done by our team here.
And I think we'll continue, obviously, this presentation we will make available. We will make the recording available. There are dedicated resources on OTCmarkets.com around OTCQX, OTCQB, and now OTCID rule sets and kind of how all these processes work, and all the links you might need to kind of, get started to the extent that you are ready to do that. So I think what we'll do is we'll just spend a few more minutes just taking a couple of the questions that we've received. There are probably too many here actually to go over all of them. So I think to the extent we can certainly follow up with people after the call. I think if I can group a few of these sort of maybe together, there are quite a bit of, kind of conversations, and I know Dan is the lawyer, you never love to speculate. But I think, kind of what we anticipate or how we think about the market kind of reaction to these changes, how that fits into kind of broker-dealer compliance processes and stuff like that. I know you're not going to give a concrete answer, but if we could just kind of talk about that a little bit, how this kind of all rolls forward.
Yeah, and it's not just kind of legal conservatism that draws me away from that, right? That's part of the reason we're doing things like this, is so that we get as much information out there as possible. So, a question around how a broker is going to see this and how brokers are going to, we need to find that out too, right? We understand how they engage with OTCQX and OTCQB companies in a certain way, in a positive way. We understand obviously how they engage with an expert market company, where what is pink current or pink limited right now comes in. And Jason covered this a lot. It's a little bit of a mixed bag because there are these different levels of connection that companies bring with it. So we're going to need to see exactly how this works. Just looking at our markets now, I think it's probably important to understand, right, that an existing pink current company has many fewer steps to take to get to OTCID, right? It's not enough just to be, as Jason pointed out, a non-US company putting disclosure out there on your home country exchange. You do need to make those certifications and transfer agent verified program as well. But the baseline of disclosure should be a relatively easy lift for a company there. For somebody that is in limited information, it may be a tougher lift to get to OTCID, right? They're already meeting what is only the most basic 15C211 standard in many cases. And so there's a disclosure piece to that, and then the other steps that we're asking all OTCID companies to take. And so I would expect that it would be, since it's easier for a pink current company to probably make this jump, that you'd see a wider cross-section of those companies get there. While the pink limited market, hopefully this serves as an opportunity for people to kind of step up and understand the value that they can bring to their investors by using something like OTCID. But again, will probably be a little bit different in the amount of uptake from that market.
Dan, just because you mentioned it and it popped up, there have been a few questions just around, back to the basics of 211 eligibility for Pink Limited and kind of Pink Limited versus expert. I know that wasn't really the entire purpose of this, but maybe just good to kind of set the stage so people kind of understand where that difference lies.
Yeah, I get stopped on the street with 211 questions. I'll answer them anywhere. So it is an important distinction. I tried to hit it, but to really make sure that it's clear. So 15C211, I think everybody who's probably joined this webinar is familiar with what that is, but it sets a baseline standard for continued disclosure for a company to continue to be the subject of broker-dealer proprietary quotations. So for a company on Pink Limited, that will continue to be the case. You will continue to, if you're meeting our Pink Limited standards, for lack of a better word, you will be meeting that baseline 211 disclosure. An expert market company is not meeting that. That is really the main reason why they are in the expert market. So that means they are not permitted to be the subject of a broker-dealer proprietary quotation that's expressed to the market in any way. That's the purpose of the expert market. That's an important distinction. When it comes, that's only a 15C211 distinction, though, and this is the point I was trying to make earlier. As we learn more about how brokers are going to internalize this kind of change, you're going to have now a pink market. Anything that's called Pink Limited, right, is going to be much lower on the scale. And so to the extent people are building compliance processes in their own firms, or investors are building investment strategies around the kind of information that we put out, a Pink Limited company might be put in a different category. So just because it meets 15C211 doesn't mean there's any guarantee of trading or volume or uptake. Maybe that's the best way to put it.
Yeah, look, as the lawyer said, we don't know what's going to happen, but if history serves as a guide, I think as we've gone through the timeline or the evolution of our markets and rolling out QX and the growth of QX, and then launching QB and the growth of QB, and even changes that we have made along the way to 211 and Pink even over the last 15, 20 years, you have seen naturally from a trading volume perspective and from an ownership perspective, investors gravitate to disclosure. Investors gravitate to companies that make information available. We see it in the numbers. If you look at how many companies now are on QX versus how many companies are in the Pink universe, but what percentage of the trading volume, right? That's a very telling feature. If you look at the percentage of trading volume that was in the old Pink no information that stopped here, as our markets have evolved, the amount of trading in that tier specifically shrank, and in limited it shrank. And so I would say that if history serves as a guide, I think investors do gravitate towards disclosure, and I think compliance teams and retail broker networks, right, are going to be looking at that level of disclosure to kind of guide them in terms of who is allowed to trade, or what is traded, or what meets criteria for suitability for investors and things like that.
And just a couple kind of clarification questions. We talked about the verified shares program. That requirement right now is for US companies and Canadian companies, just because we did get a question on that. So just to kind of clarify that piece. Another piece of clarification is, and maybe Jason, you want to speak to this. We did recently announce that companies are no longer going to need to provide letters from their lawyer with annual kind of information. And that kind of rolls into this whole process. So maybe just touch on that a bit, because that was another question as to whether that was still a requirement, which it's not.
Sure. And I think this goes to, again, the evolution of our market. In fact, last year, I believe it was, we announced that we no longer required sponsors for our QX and our QB clients. And again, a lot of that evolution, I'll put it back to the 15 to 11 reform, but is the fact that we've taken on much more of the ownership of taking in that information and, reviewing that information and then disclosing out to the market that information. And so as we've evolved and taken much more ownership of the compliance and disclosure process, the need for that legal letter that used to have to come is no longer there. We can take on a lot of that work. And so we're really just asking now for that management certification, for that 12G32B certification, for that company profile verification. And, for us, it's about making this as easy as possible for companies to be public. And so we can cut out whether it's the cost of having to get a sponsor or the cost of having to get a legal letter, where we've taken on this ownership and obligation and responsibility. If we can cut out some of that stuff to make it easier to be public, then we're going to continue to do that. But ultimately, the markets continue to evolve, and investors and brokers and traders and compliance people, right, want to see accurate and up-to-date information so they know what to trade and where to trade and how to trade and have all the information when they do trade. And we continue to evolve with them. And with that is the evolution and growth of our compliance team. And so we can take on some of the roles and responsibilities there.
Yeah, I think that helps kind of frame up sort of some of the changes that we're making and kind of how that speaks to the overall evolution. I am conscious of time. Is there anything else, Jason or Dan, before we wrap up that either of you guys wanted to add to the discussion?
I'll let Jason close it out, so maybe I'll go first in case he has some final thoughts. But there really is we got into specifics and we got talking about very particular aspects of OTCID or compliance responsibilities, which is great and useful. But from a very overall perspective, right? Jason started to hit on it in what he just said. We exist to allow brokers to find the best price for their customers, to allow companies to express their compliance to U.S. investors, to access the U.S. market, right? This is another step in that direction. Launching OTCQX, launching OTCQB, those things were confusing and, not well understood at the beginning. And now they have just become part of kind of the lexicon and part of the market structure that everybody understands and appreciates. OTCID is, again, intended to bring together all of the access and all of the ease of being public that Jason was talking about with, compliance obligations, not only ours, but those that we know our downstream, friends in the market have, broker-dealers, investors, clearing firms and the like. And so bringing all of that information together, that is the purpose of doing something like OTCID. And the intent is really to see it take hold and carve its own place in the market in the way some of our other changes have over time.
Jason, anything to add?
No, I think Dan summed it up really well. The U.S. is a fantastic market in which to have your shares traded. Whether you're a small U.S. company or a company that's using us as their secondary market, our tagline of list local, trade global. That 12G32B exemption is a powerful thing. And was it Spider-Man that said, with great power comes great responsibility? Well, this isn't great responsibility, but for a long time, there was no requirement of ownership. And I think the market has spoken. If you want the investment that comes from a U.S. investor, it's not too much to ask that they get at least a comfort level of a baseline of information. That's the feedback we've gotten from the market. And again, we try to do this in the most efficient way possible to make it as easy for issuers. And in fact, we didn't even mention, but for our Canadian friends, we are going to be launching the rollout of the fact that we're going to ingest the CDR filings. So even there, if you're on ID or QX or on QX or QB, we'll be ingesting CDR filings. So that's one less step you have to do. But ultimately, you should own your U.S. market as it is the largest market in the world. And so I don't think that's too much to ask, but I'm biased.
Well, I will just remind everyone that we will make this replay link available. We will make these slides available. If you go to our website, otcmarkets.com, you can go there to specifically see the QX requirements, the QB requirements, the ID requirements. There is a page that discloses upfront all, any and all fees for applications and all of those kind of detailed things that you might be looking for specifics on based on your the profile of your company. So I would encourage everyone to check those out. I do apologize that we didn't get to as many questions. There was more coming in than I thought might. So we can definitely do some follow-ups after this individually to kind of help those out that had specific questions. But really appreciate Dan and Jason, you guys taking the time. And for everyone that joined today, I hope you learned something new. And we will certainly be in touch to help you through joining our markets as we move forward. Thanks, everybody.
Thanks, Kristie.